Hello and a warm welcome to Voice of Russia's political discussion program, Debating Russia. I'm Peter Lavelle. After more than a decade of robust growth, Russia's economy has slowed down. Projections moving forward differ. However, there appears to be near consensus. Russia is set for still more growth, though at a much slower rate. To explain why this is the case, I'm joined by Hamish McRae. He is a financial journalist and associate editor at The Independent. We also have Lazar Kikic. He is a Russia analyst at the Economist Intelligence Unit. Andrei Kuznetsov at the Lancashire Business School. And here sitting in Moscow with me at Voice of Russia's studio is Ben Aris. He is the editor of Business New Europe. Okay, Ben, if I can start with you first. This story has got a lot of traction in Western media. We've had about 12 years of really robust growth, and now it's coming to a screeching halt, though there is still growth. It's just very meager.
Yeah, it was a bit of a shock. I mean, going into this year, we were expecting post-crisis to go a bit slower. Everyone was predicting 3 and 3.5% this year, and it will look like we're lucky to scrape 1.8. I don't think anybody was expecting just how quickly it slowed down. And of course, it's a combination of factors. I mean, one is the horrible external environment, and two is all of the lack of reforms that have not been done over the last decade are now sort of telling, and there's also a horrible lack of confidence amongst Russian businessmen themselves.
Hamish, I think I can get more pessimistic than that. I've been living here for 15 years, and when Mr. Putin came to power, this is one of the things that people liked. I mean, really robust growth. I mean, 7-8%. I mean, you could feel the difference year after year. Now something's changed. Hamish, what has changed?
Well, I think the energy market is one thing. That certainly propelled growth rapidly for many years. I think the other thing is that catch-up is easier than pushing ahead. And if you have a lot of clever people and you are applying Western technology and Western markets in some measure, you will get growth. I think that, but now it just will become harder from now on.
Okay, Andrei, would you agree or disagree with that? Because a lot of people, I used to be an investment banking. That's how I came to Russia in the first place. I worked at Alpha Bank. And a lot of people will tell me that the easy things have been done. The low-hanging fruit has been already taken off the tree. Now it's a little bit harder.
Well, yes, I think I agree. There have been conditions which helped Russian economy to grow without actually introducing substantial changes in the structure of the economy or in the institutional setup. There was a lot of capacity available to companies, and as demand in the internal market and the domestic market had been increasing, it wasn't a big problem for them to tap into this spare capacity without actually investing in new technologies and new machinery. So the growth that we could observe over the last few years, it was still a form of an extensive growth, and there are limits to extensive growth. So personally, I'm not surprised that the situation has been changing recently.
Lazar, if I can go to you, I guess really the question is what should be done now, because there seems to be consensus on the panel here on what needs to be done to get back to growth at 7-8%. That politically is something that is expected, I would say, here, because people have gotten used to things getting better and better, disposable income growing every single year. You can live with the inflation problem, but as long as your disposable income increases, people are saying, fine, they like the way it is, but that's not the case now.
Well, I suppose, as you say, a general consensus on Russia slowing and what the main causes are. But before we go into that, I would like to emphasize that I think the nature, the speed of the slowdown has been a bit of a surprise. The fact that at the moment, somebody mentioned 1.8, I think they'll be doing well if they go 1.5. This year. That's quite a deceleration and a very quick one. And I have to say it's not totally clear why that's happened now so quickly, though, as you said, and the other panelists, the reasons for overall reasons are not surprising. It's well to remember also that if we look at Russia, it has a lot of negatives in terms of the drivers of growth, bad demographic situation. There is such the oil and so on is a double-edged sword. There's such a thing as a resource curse from which Russia Russia seems to be suffering. The size of the country is unbalanced and negative as well. Technological change has ground to a halt, and this is a country that was once a former superpower. So there are many factors which are holding back, and above all, as was mentioned as well, the institutions. So how to change this is not totally clear. And I guess the last thing at this stage I'd say, so to quote, was not always right, but Prime Minister Medvedev actually hit the nail on the head the other day. He said, well, look, let's be honest, we really don't know. We really don't know what the causes of fast growth are. And in a way, without being too agnostic, I think he's right.
Ben, but some of this is already self-induced here, because we were speaking a few months ago when the decision made was to stop stimulating the economy. And basically, and you told me personally, I mean, it's about balance sheets. I mean, this is how the political leadership looks at the economy. We have a good balance sheet, which is true. I'm looking at an economic report from Eurosib Bank here, and that's one of the only good things that they actually say about the current economy, though they're optimistic that things will change at the end of next year. The lack of stimulus and just really looking at the balance sheet, Ben.
Well, the balance sheet's very strong, despite the slowdown. But as I said before, that it doesn't actually hurt the population. I mean, the situation here is totally different to that in Europe, in so much as the slowdown, lack of growth, means you've got high unemployment, you've got massive debts, you've got horrible deficits. And in Russia, we have none of those things. We have historic low unemployment. Incomes are continuing to rise. People have jobs, have money in their pocket. And that gives the government some wiggle room, and they've decided to go after some of the hard things, like bringing down inflation, rather than cut interest rates, in order to try and stimulate the economy. And they're betting, I think, on organic recovery in the rest of the world to lift Russia, so that they don't need to cut interest rates and spur inflation here. They have the luxury of letting the rest of the world do the work. And as a bet, I actually think it's proving to be working out so far, in so much as the latest numbers just coming out now, just yesterday, were suggesting that the economy is starting to pick up again, and that the last quarter of growth is going to be much better, although less than everyone was expecting. But we're talking about changing the models of growth. I think Hamish mentioned the catch-up is easier than the second stage, and we're in the second stage now. That all the easy gains from the oil money and filling the empty seats has been done. And that was about the state pushing and spending money. And now the state has to step back and nurture economy and let the private sector take over, which is a question of doing the structural reforms. And again, mixed record on that. They've started with things like the ease of doing business World Bank criteria. But at the same time, you've still got, these huge state national champions in the gas sector, in the aviation sector, which I think are counterproductive. So we're kind of a mixed picture. But on the whole, I think we can be relatively optimistic we'll return to some sort of middle-paced growth next year.
I mean, how do you react to what Ben said? Because when you look at the economy here, it's always relative to other economies in the world. And this is one of the things that Russia is gambling on, because it looks at the enormous debts that have been taken on in the Eurozone. The U.S. economy is a bit wobbly and still politicized when we come to deficits and dealing with debt control and things like that. I mean, is the Russian model as it stands right now too careful? It's not ambitious enough?
Well, I've in the last 3 weeks, I've been in both in Greece and in Ireland. And from a Greek or an Irish perspective, look, don't do anything. Just keep going. You are looking very good indeed. But I think that Russia will be able, I think it's right to be cautious now, right to start, if you can. How do you nudge the private sector into more reconstructing, taking on more of the growth, investing more, all that? I think that Russia, if it's lucky, will have another 5 or 10 years of reasonable global growth. And if the world economy, and particularly the developed world economy, manages to, because it's been such a deep recession, will it be a longer recovery? And I think if it's a reasonably long recovery, that buys Russia time.
You're listening to Voice of Russia's political discussion program, Debating Russia. I'm Peter Lavelle. Andre, if I can go to you on the phone in London, what needs to change for the growth strategy for this country? Because, again, I think we have more or less consensus here is that the limits of extensive growth have been attained. Now you have to start nudging it forward, and this can be tough decisions. And I want to talk about the political implications about this as well.
Well, it has been no secret that of the most fundamental reasons for the slowdown is the structural problem. Russian economy is very much a one-trick pony, really. It so much depends on its natural resources. And there have been attempts to change the situation. I must say that per se it's nothing wrong in developing your natural resources and exporting them, but this cannot be done forever. And also there is a problem of reallocating the income which you get from selling these resources. And for a country like Russia, it is a challenge. Therefore, I would point at the structural problem as something which needs very close attention. But there is a political component, as you said. Changes which are requested, which are required, may not be popular because it means that certain sums have to be reallocated in favor of investment at the cost of consumption. And it is pretty obvious that the current government is very much concerned into maintaining its public support and therefore it is a big question how far they're prepared to go to risk to lose this support.
Lasse, I agree with you because this government in Russia is facing the same issues that its Western peers and even BRIC peers. Is that there's an agreement. The government has the power, been given the power to keep the economy moving forward. But once it gets harder and harder, I know state employees and state companies that are not seeing a pay increase this year, and they're grumbling about it.
Well, yes, and this point about Russia's political stability being fragile potentially, I think, is right. We saw middle-class protests in Moscow last year, and what happens if the economy, the slowdown lasts, and not just the middle classes, but the working classes start rebelling as well. I think the authorities are somewhat nervous about this. This is why I also think they have been a bit taken aback by the slowdown. I don't think it's expected. I don't see the latest figures as giving much encouragement. The central bank has been reluctant to cut interest rates because inflation hasn't been coming down that much. In fact, inflation is also increasing, so the worst of both worlds. I wouldn't be too surprised if they change tack on this soon. It's been a long time since they cut rates, and I think these latest growth figures, which are very poor, I mean, relative to, you compare with Ireland and Greece, but they compare themselves with the other BRIC, compared to which they're doing really badly. And again, the emphasis on just how low investment is. If we take, the investment rate in China is 50%, 35% in India, 27% is the emerging market average. Russia's is only 20%. So this has to be worrying the authorities in Moscow. I think there's no doubt about that.
Ben, jump in.
Yeah, you still have to put it into perspective. I mean, the per capita income in China and India is like 6 or 2,000 a year. Russia's now up at 14 to 18.
Of course.
And that it's in a whole stage further on. So everything here goes a bit slower. I mean, according to the UNDP, it's now a high-income country. And by that definition, it's no longer an emerging market. In other words, it's a normal market with some serious problems. But you're right. I mean, to point out the investment, I mean, that's the key number. And that is doing very badly. Banks are not lending, companies are not borrowing, the incoming money from outside.
Well, Ben, why is that? Are they waiting for initiative to be taken by the government? Is this a wait-and-see approach?
I think the companies certainly are complaining about the high cost of borrowing, and that's to do with the high interest rates. And Lazare is absolutely right. The interest rates have to come down. But like I said before, the central bank is focused on this inflation problem, and it did tick up from 6.1 to 6.3 recently, which is going in the wrong direction. So that we've got stagflation, high inflation and no growth, which is, every central banker's worst nightmare. And it's holding back the investment, and without the investment, we don't get the growth, and without the growth, then you quickly lead into the political problems because incomes are already starting to tick downwards, and no one wants to go there. So in a way, they're going to have to cut rates, whether they like it or not, in order to bolster the economy.
In London, I hear someone agreeing. Who's that person? And go ahead.
No, I think we were both
we were both nodding at each other.
nodding sagely, yes.
Actually, one after each other. Go ahead.
Can I just say something? I think the other thing is that there is a wall of investment money in the world hunting opportunities. So it isn't just Russian funds that should be mobilized to investment, it's global funds. And the issue there is how much risk do you want to take? And as a sort of shorthand, you'd say that these global funds are fairly happy to take on the sort of standard investment risks that they know about, but they don't like political risk. And it seems to me to attract global funds, you have to try and find some way of reassuring potential investors that there is no political risk. You won't, suddenly have your local people thrown into jail or worse.
I think you make a very good point.
Go ahead. Ben wanted to react to that. Go ahead, Ben.
I just wanted to say, say that, we're definitely seeing a pickup in interest in Russia. We had Vince Cable, the UK Trade Secretary, out here just 2 days ago with a delegation looking to invest. We've seen a huge influx of retail investors from Europe who've set up shop here, and I think FDI, foreign direct investments, tripled over the first 6 months, according to the president. And because there's money to be made here. I mean, there's a slowdown, but there's still good money to be made here, and that's pulling people in who are also being pushed out of Europe because of the soggy conditions there. And the same thing on the equity market. We just had a string of big IPOs, a sort of first flurry of IPOs on the equity market for ages, as institutional investors and portfolio investors have suddenly become interested.
So you can cherry pick here. Laza, do you want to jump in?
Well, I think the point about political risks is a good one. I don't know what the panelists think, how solid the political stabilization in Russia is, and whether people make too much of the potential instability. Personally, I think there is a potential issue there. We've seen social unrest all over the world in both developed and developing countries, but whether Russia is at risk of social unrest, I would say yes, if the slowdown continues and deepens.
Ben and I in Moscow were shaking our heads here. I think one of the things that I've noticed, and I'm going to defer to you gentlemen because this is what you do professionally, but my personal experience is that the 1990s is still so very much with every single family in this country, and no one wants that kind of instability again. And it's, as Ben points out, there's money to be made here. People are making money. It's just the expectations are a bit lower. Let's go to Andre on the phone. Andre.
I think this is a very, very fair point. I think that people are tired of uncertainty, and that the government is very much aware of this, and therefore they're treading a narrow line between trying to make this economy more efficient, but at the same time not to alienate their potential electorate. And this is the country where we have 20 million of employees who are employed by the state and 40 million pensioners who depend on the state. And I also would like to pick up on the point that Russia now is a middle-income country. Well, we must not forget that wealth in this country is distributed in a very, very unequal pattern. So there are very many people who live very close or beyond the standards of poverty. So keeping stability, maintaining stability, seems to be a political priority for the government. But that makes the situation very tricky because there is no gain without pain. You cannot really kickstart this economy without doing something about the problems which it faces. And they are quite fundamental. They're structural. You need to take money from somewhere and invest them somewhere else. And this cannot be done without some serious implications. At the moment, the rate of unemployment in the country is only 5%. And it has been that low for a long period of time. So one of the possible consequences may be a change in the rate of employment. But are people prepared to take it, considering that I wouldn't say the majority, but very many of them are not wealthy at all. So it's a very difficult situation in terms of how changes may be introduced and whether the government evaluate the situation as favorable for starting these necessary changes straight away.
You're listening to Voice of Russia's political discussion program, Debating Russia. I'm Peter Lavelle. Ben, what we just heard from Andre makes perfect sense to me. There's no gain without any pain. And I think really what's interesting in this case is that this is the first time that they've really had to sit down and think, we have to reshuffle the deck, go to the next stage of development, find new engines of growth, because for the last, I would say, 13, 14 years, that's an academic question. Now it's a real political, financial, economic question to be addressed.
Yeah, they're taken the bull by the horns in so much as they've launched a whole series of reforms, the WTO accession, which was clearly not in Russia's short-term economic interest, and everybody's been complaining about it in things like the pork sector and the automotive sector. And yet they did that because it's a way of imposing external adjudication on a set of reforms. The same with Putin's call for Russia to be in the top 20 of the World Bank's doing business ranking. Same idea, it's an externally adjudicated set of reform goals. So they see the need for for it. The problem with Russia is that they've never lacked for good ideas. Where they fall down always is on the implementation. But what encourages me is that all of these changes, these plans, they're going more systematically and methodically at it than I've ever seen, particularly compared to the Yeltsin era. And it's coupled by the gathering momentum in the anti-corruption drive. And that's the key.
As a good friend of mine
work.
points out, in all fairness here, because living in Russia, one understands corruption, there are a lot of arrests made, but where's the follow-through on convictions? So this is an issue, let's be fair.
Of course. I mean, as I say, the implementation is where they fall down, and a start has been made. But this is a very, very nasty problem in any country, not just Russia. And I think it's going to take a generation to work through it. But there is a risk to taking bribes that didn't exist only a few years ago. And the way you can see that is that, the cost of bribes have gone up fivefold.
Exactly.
So the people in the market, they're pricing the risk that there is. And people are going to jail. It's just, not at the top of the tree. I mean, there's still some sense of immunity if you're well connected. But it's a start. We've never seen this before. And, it is the fundamental problem that the economy faces.
Hey, Mitch, if I can go back to you in London, let's look at the external environment here, because one of the things that when you look at the commentary coming out of the political elite and the government is that, it's very difficult when you're in a place of power to decide on reforms when you have a very tricky external environment. I think that's one of the double whammies that this government has to face, because you're going down the freeway and you're going 70 miles an hour and you have to go out while the car is moving, open up the hood and change a few things, put the hood back down and get back in the seat. It's not easy to do.
Well, I think that if I'm right, we will have better balanced growth for the next bit of this cycle. Some shading down from in China and India, which takes a bit of pressure, particularly China, off, this is from a European perspective, off the pressure on natural resources. That will enable Europe to, for all the extent to which it's shot itself in the foot with its various rigidities, it will enable Europe to do some sort of recovery for the next 5 years. US, not bad really, not bad at all. No one's mentioned, by the way, the fact that the US looks like becoming the world's largest oil producer in another year or so. That will propel US growth. So I think we can look to a slight shading down in the emerging world in Asia, a slight increase in North America and in Europe. And that will be better balanced growth, and that is more likely, therefore, to persist for a while yet. So I think there is a bit of a tailwind for Russia over the next 5 years, which will make it somewhat easier to make the reforms it chooses to do.
Andre, would you agree with that, considering how the external environment is evolving?
Well, it's difficult to use one paint one color without considering the shades. And yes, there are certain signs of improvement. On the other hand, it's still very fragile. It appears that other countries which are similar to Russia in terms of their economic development have been using time to try and restructure, to try and prepare themselves for the next decade, for the next cycle of economic development. But Russia seems to have been delaying these changes and using its enormous financial resources accumulated through the trade of the sale of oil to maintain the status quo. There are signs that the world economy is going to enter the period of growth, which is always good news. However, I think that the consequences for Russia may not be, particularly impressive, because the export of oil is still the main link, the main channel through which Russia is plugged into the world economy. And that's not good enough. Russia's market, is attracting some attention, but frankly, the purchasing power is not very great of the majority of the population. As for financial investment, it's mostly what we call hot money, that is short-term investment in liquid forms, which can be easily withdrawn from the economy as the risk increases. So how much Russia may benefit, apart from the fact that there will be some stability in terms of the price of oil, is yet to be seen.
Okay, Ben, you and I have talked about oil prices so many times. Let me go to Laza in London. What would be the ideal oil price for Russia to force the political elite to go down the path of reform, as painful as it may be?
Well, it's a difficult question to, specify an exact price. I think the interesting thing, when, linking to the price of oil and the external environment, environment discussion of the panelists of the last few minutes. External environment is important, but I think what one should look at and emphasize, it's very interesting how the Ministry of Economy, in explaining its latest downward revision to its long-term forecast, emphasized this is a really drastic revision. It's not totally clear to me. Maybe the gentleman in Moscow can answer why they chose this particular moment to make this quite an enormous revision. But one thing they mentioned, the commentary, they said, if I remember correctly, we can't blame the external world for this. The reasons for this are our own difficulties, our own problems. So I thought that was quite an interesting admission, because there's obviously a temptation of every government to, blame the external environment. The fact that they didn't at this moment, I thought was quite telling.
Mm-hmm.
I think that I may have a direct answer to the question which you asked, because I'm looking at one of the publications in The Economist, and it says that the oil price at which Russia can finance budgeted spending without borrowing has increased from just $34 per barrel in 2007 to about $100 for the year ahead.
Yes, absolutely.
So, it suggests to us that the price should be well above $100.
That's for the fiscal balance. To maintain, that's the calculation, to be in fiscal balance.
Yes, but my question is, I agree with all what was just said here, but my question is, what should be the price of oil to help the political elite down the path of the second stage or the advanced stage of development? I think I know the answer. Go ahead, Ben.
Well, the price is dependent on the state of the economy. I mean, to come back to answer Lazar's question, the Ulukayev has drastically downgraded the forecast. And I saw that as political in so much as you've got a fragmented Kremlin now, and the people sitting in the Ministry of Finance and the central bank are very clued up, very clear about what they've done, and both the Ministry of Finance and the central bank are saying we need deep structural reform. And then in the Kremlin, you've got all these statists who just want to run oil companies and collect the cash. And what's going on is they're trying to put some backbone into the administration, into the various parts of the administration, to see these reforms through, because it is the only way out in the long term. And then the price of oil is a function of how successful that program is. Now, at the moment, we need $100 plus to balance the budget. In fact, I think the non-oil budgets, the budget deficit, if you take the oil out, is running at -10 at the moment, and we're only just scraping a surplus in the headline numbers. But that's, as everyone says and agrees, it's a problem. We need to, go towards a more normal country setup. And I have always said that if oil dropped to $70 or $80, then that would force them to do it. It wouldn't cause a huge disaster, but it would put enough pressure on them to actually make them do the reforms.
Amish, what do you think about that?
Makes a lot of sense to me.
I think so too.
I mean, but look, you can't control the price of oil. If we knew what it was going to be in 3 years' time, we wouldn't be sitting around talking on the radio. We'd be investing. I think that is just an external thing, that you have to have a strategy that will work at lots of different prices. And actually, you've got to do it anyway. You've got to do the reforms. Is it better to do it when you have more political pressure, or is it better when you have a bit more fat in the economy to buffer to poultice the pain? I don't know the answer to that. I'm not close enough to the subject. But one thing I'm very sure of is you can't control the price of oil.
The key thing with this, particularly this Russian government, is that if they don't have to do the reforms, they won't. And for most of the last 10 years, they didn't have to, because they had buckets of cash. And the difference today is they do have to do the reforms, because we're going to get into serious trouble in a slowdown with twin deficits on the horizon unless they see this through. And so I think there is a renewed effort. But what worries me, as has always worried me, is they're very bad at the implementation. They know what to do, but they're very bad at actually doing it.
Andre, I'm going to get on the phone. I'm going to give you the last word here. Go ahead.
Well, I think it's been a very interesting discussion. I think, surprisingly, we've covered quite a few important points and provided reasonable comments. It's not for self-flattery, but this discussion, to me, seems to be pointing at one of the major challenges faced by Russia at the moment, how to balance a need for quite a substantial, profound economic change with maintaining social peace and stability in the country. Well, I don't think there are easy answers to this question. The government, the important thing, however, in my opinion, is that how important these things have been recognized by the government, and there is some will to do something about it. So I think this allows us to finish at the positive note.
Okay, on a positive note, I want to thank Amish, Laz, Andre, and Ben here in Voice of Russia's studio here in Moscow. I'm Peter Lavelle. You've been listening to Voice of Russia's political discussion program, Debating Russia. Stay with us. Hello and a warm welcome to Voice of Russia's political discussion program, Debating Russia. I'm Peter Lavelle. After more than a decade of robust growth, Russia's economy has slowed down. Projections moving forward differ. However, there appears to be near consensus. Russia is set for still more growth, though at a much slower rate. To explain why this is the case, I'm joined by Hamish McRae. He is a financial journalist and associate editor at The Independent. We also have Lazar Kikic. He is a Russia analyst at the Economist Intelligence Unit. Andrei Kuznetsov at the Lancaster Business School. And here sitting in Moscow with me at Voice of Russia's studio is Ben Aris. He is the editor of Business New Europe. Okay, Ben, if I can start with you first. This story has got a lot of traction in Western media. We've had about 12 years of really robust growth, and now it's coming to a screeching halt, though there is still growth. It's just very meager.
Yeah, it was a bit of a shock. I mean, going into this year, we were expecting post-crisis to go a bit slower. Everyone was predicting 3.5% this year, and it will look like we're lucky to scrape 1.8. I don't think anybody was expecting just how quickly it slowed down. And of course, it's a combination of factors. I mean, one is the horrible external environment, and two is all of the lack of reforms that have not been done over the last decade are now sort of
to tap into this spare capacity without actually investing in new technologies and new machinery. So the growth that we could observe over the last few years, it was still a form of an extensive growth, and there are limits to extensive growth. So personally, I'm not surprised that the situation has been changing recently.
Lazar, if I can go to you, I guess really the question is what should be done now, because there seems to be consensus on the panel here on what needs to be done to get back to growth at 7-8%. That politically is something that is expected, I would say, here, because people have gotten used to things getting better and better, disposable income growing every single year. You can live with the inflation problem, but as long as your disposable
telling, and there's also a horrible lack of confidence amongst Russian businessmen themselves.
Hamish, I think I can get more pessimistic than that. I've been living here for 15 years, and when Mr. Putin came to power, this is one of the things that people liked. I mean, really robust growth. I mean, 7-8%. I mean, you could feel the difference year after year. Now something's changed. Hamish, what has changed?
Well, I think the energy market is one thing. That certainly propelled growth rapidly for many years. I think the other thing is that catch-up is easier than pushing ahead. And if you have a lot of clever people and you are applying Western technology and Western markets in some measure, you will get growth. I think that, but now it just will become harder from now on.
Okay, Andrei, would you agree or disagree with that? Because a lot of people, I used to be an investment banking. That's how I came to Russia in the first place. I worked at Alpha Bank. And a lot of people will tell me that the easy things have been done. The low-hanging fruit has been already taken off the tree. Now it's a little bit harder.
Well, yes, I think I agree. There have been conditions which help Russian economy to grow without actually introducing substantial changes in the structure of the economy or in the institutional setup. There was a lot of capacity available to companies, and as demand in the internal market and the domestic market had been increasing, it wasn't a big problem for them to